Good afternoon, everybody. What's going on? We got some stocks moving here after hours on earnings. Dimitri. You didn't respond, I don't think, in the chat when I said this morning. I was like, oh, Dimitri's gotta love when I start shorting NVIDIA and everything else. I can't talk about it until I do the disclosure. I'm an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. There's a disclosure. I got out of Mara today into that up move. I'm glad to have it off my books, but I kind of enjoyed trading it a little bit too much. So we'll see what happens with that. And I still got some TQQQ short, but I added on some NVIDIA and some SOX L short. Not an easy trade. Let's talk about it. So first we got some earnings names. We got stocks on the move. We got a firm all over the place. This thing up now? Closed at like 49 today. So it's down from where it closed. Had a big move during the day today. A lot of growth. Had big moves. So firm's down small-ish, but still up on the day. So nothing too insane there. A lot of volatility. Pinterest got whacked hard. I was so tempted to scoop up some pins at 30 there when it was down at that price, to be honest. And I was like, you know what? I really don't need another snap on my hands. But, you know, the difference between pins and snap is that I got a strong feeling that pins isn't going to blame any missed numbers on the Middle East. Much better run company. I think Elliott Management's in there. It's been helping it out. So, you know, if pins ends up settling at 34, not the end of the world. It was just at 34 in December. Not like Snap just getting absolutely just obliterated. Pins misses playing on Taylor Swift. I assume you're joking. What else? Is there any other big ones? What's that DXCM doing? DXCM. Down and up. Got Expedia out. Expedia, small, beat on EPS and Rev, but trading down. Okay. All right. Let's just, we got Net coming out at 415. That's usually an interesting one. There's another name that had a big move today. It's trading down $3 right now. They're not out. What time is it? It's 4:14. Sometimes they hit things down ahead of time. All right, we'll keep an eye on that. Let's hop in. So how did the market close today? Very, very tight day for the SPYs. SPYs are up 0.04%. I think, did we close at 5,000? Where did we close? I don't know. So SPYs up 0.04%. Qs are up 0.14%. The IWM is up 1.5%. Really impressed with the IWM today. It seemed like a little bit of a rotation day. We saw that out. Cloudflare's out. Cloudflare beats on EPS, 15 cents versus 12. Beats on revenue, 362.5 billion versus 353.8. We'll see if it's enough. So anyway, you know, pre-market this morning, it felt to me almost like it could be a rotation day today, where maybe we get some heaviness in the Qs and the Mag 7 stocks, while at the same time, maybe we can actually get bid up a bit in growth. And I remember seeing pre-market that, there goes net. I remember seeing pre-market that growth was relatively strong. But, I looked at the TLT having another nice gap down this morning, and I was like, man, I just can't let myself trust this. It's happened too many times. I just got filled on the bid and NVIDIA. NVIDIA's getting hit hard here after hours. And Sox L too. Anyway. I thought maybe we could get a rotation day, but I really tried to dampen my expectations because of the TLT. I think I even specifically said it in the morning meeting. Like, today looks like it could be a rotation day, but it's hard to really believe that if interest rates are higher. And that TLT was gapping down this morning, so honestly, I didn't trust the long part of the rotation trade. Knowing that if it were to happen, I would benefit from it anyway, because a lot of my swing positions they would benefit from a rotation trade. But I didn't trust the rotation trade so far as to be aggressive on buying when it comes to growth tech or energy. That we did mention in the morning meeting today that XLE was starting to look pretty good again for potentially another leg up. I just didn't trust it with the TLT being down as much as it was. The side of the trade actually that I preferred to focus on for today, though it's the difficult side of the trade in a lot of ways, is the short side. The short side of the Qs, on the short side of some of these semiconductor names, with the thought process of, one thing that was really interesting that gave me a little bit more conviction to try to push those names to the downside was seeing the short-term tactical from Pat's note, which is a pretty good piece of information that doesn't, like I always say, it doesn't necessarily mean short. I know that's what I was trying to do today. It does not necessarily mean short. It more means to be patient on basically not put on any new longs, which there's exceptions to that. If there's relative strength, like we had a lot of relative strength in growth, so people that were buying growth, it makes sense. Or if you're trading something that's in play because it's trading on earnings or whatever, then obviously short-term tactical for the market, it's not going to matter to you at all. But this helped to give me some conviction after initially being patient to try to do some shorting. So I shorted like a feeler in Tesla pre-market, which I ended up getting stopped out of for a break-even trade. I shorted a feeler in NVIDIA pre-market that I got heavier in off that tail. We called out, and that's the high of the day too, right? Yeah, this was a good call out here. Shorted a feeler pre-market. It rips higher. I think it got above the pre-market high. Actually, no, maybe it didn't. Let me see. It got above the pre-market high, but it did not get above the after-hours high from yesterday when NVIDIA was reacting up to ARM. But yeah, it ripped up again towards that 710 area and then put in the shooting star. And I called out in real time a short back through 705 versus the 708 high. So basically $3 in risk there, but it gave me the opportunity to add some size onto it. And then, I wasn't getting any follow through. At a certain point, it looked like I was going to get stopped out. No surprise, counter trend trading. Make sure you get your risk covered. And at that point, if I got stopped out, it wouldn't have been in the end of the world. I was able to cover enough risk into the down move. But, I stuck with the trade, stuck with the game plan, stuck with the stop loss. I had a stop loss at highs and, re-shorted into the up move, and it ended up closing weak. And then eventually, at a certain point, being patient, I shorted the semiconductors as well. I was a little bit late on my execution because I was on the phone. I saw the trade while I was on the phone. I was like, oh man, I really want to actually short some semis right now. But again, I'm on the phone, so I tried to hit the bid in SOXL while I'm speaking to somebody, and nothing happens. I'm like trying to figure out what's going on, and then I'm just a little bit distracted. Then I realized it was hard to borrow, so I ended up not getting like really the price that I wanted. I really wanted to short off this 1120 candle, that shooting star kind of high, but not necessarily use that as a stop loss, to be totally honest. With the plan at this point where I was going to build into that a little bit further. So I ended up not getting like a great initial price on that Sox L short. I was almost, which is something I absolutely hate doing. I think it's really bad execution. I was almost shorting where I should be covering. If I had really good execution and I was able to get that short on earlier I could be covering into the ADMA, into this equilibrium area. And instead, my execution wasn't even going off till it was there. But at that point, I said, you know what? Screw it, basically. I've been really patient. This thing's had this really big move. I'm watching this arm not be able to give continuation, and I don't know. Just kind of was starting to think that this was done. Maybe I was even a little bit too aggressive, to be honest, because the biggest concern that I have, and I expressed it into the VTF as I'm trying to short a little bit more aggressively right now, is that I'm a little bit too early big picture, just because the VIX is still so low, volatility is still so low. I want that to loosen up a little bit, and that could loosen up once we get through options expiration. So next Wednesday, I guess, is VIX expiration. A week from tomorrow is options expiration. If I was being as aggressive as I am to the short side right now, and it was post options expiration, I would just have much more confidence in the trade. So instead, I'm getting into it, but I'm really trying to be very focused on the risk management, which, again, that's what I did even with the Tesla short. Initially, I was shorting versus 190, like I mentioned in the morning meeting. Got this great down move, covered very little because I was being super greedy, and then into this bounce higher, I was like, you know what? And I think my price was 189. I was like, you know what? I'm just gonna give this to the high of the day, basically. I don't want to give this any extra room. I'm just not sure that the market's ready yet, and I got myself stopped out, and only because I was super, super greedy, because this is a pretty good initial down move here. I basically was break even on it up very, very small, and I was like, all right, I'm done with Tesla. I think it'll give another opportunity to short at a certain point, maybe closer to like 195 or something like that. We'll keep an eye on it, but I don't know. I just feel like the this move in the semis has just gotten so out of control at this point, and I'm not even necessarily bearish fundamentally on AI or the AI spend that's driving this move. It's just at this point, the move that Nvidia has had, and I was almost kind of comparing it a little bit, but differently, to that insane quarter that it had back here on May 23rd, where that's all of a sudden when everybody was waking up to AI and AI spend for these companies for the first time, and I was thinking about, like, that was a huge gap up. It had to digest it, then it did give continuation, but then eventually it just hit a point where it needed to digest the big move that it had. And just looking at Nvidia now, it's obviously a different situation with the parabolic nature of this move, as opposed to just being like a really big gap up off of an earnings report. But it's just at a point here where, like, some of these names are just getting so insanely extended if you look at like a weekly chart or whatever, and yet at the same time we're giving us some signals that they're struggling to continue. And whenever you have good news and your stock can't continue higher up on it, it's usually a signal that at a minimum it can't continue, and potentially it's a signal for the other direction. And we've seen pretty much every day that Nvidia has been sticking in front of $700 here some sort of good news, whether it's you had the Goldman Sachs upgrade, which I think was on the 6th, to an $800 price target. Then I think you had Cisco news yesterday. I think they couldn't get this thing really going either, and maybe it had another price target increase from a different sell side on that day, and it just hasn't really been able to clear up. And then today, it had another excuse that it could have gone up on, which was just a secondary move off of ARM, which it initially did after hours. And honestly, one of the biggest things that made me think short again for Nvidia today was actually coming in and looking at Nvidia's pre-market action this morning versus where it was after hours yesterday versus where ARM was continuing to trade. I mean, ARM was just insane today. Insane. And eventually we figured out some really good information here in the VTF, that there still is a lockup on ARM, so you don't have the whole tradable float out there. That probably includes SoftBank's massive share. So SoftBank is probably incentivized to have this thing be as high as possible into the March 12th, expiration on the lockup for this ARM, and that's probably enabling it to trade more like a small cap, more like HOLO than the company that it probably is. Yeah, Dimitri, I'm saying out of the corner of my eye that Nvidia had every reason to squeeze above $700 today to go Tesla's after hour as highs, and it just couldn't. And that's kind of the exact same thing that I was seeing. Still didn't make it an easy trade. Um, and at the end of the day, I like this candle here from a bearish thought process. This kind of push through failure, little doji here. So we'll see. We'll see if we can get a little bit of a deeper pullback on Nvidia. I'm much heavier in SOX L than I am in Nvidia, but I've got positions in both, and I'm even more significantly heavier in TQQQ short than I am on both of them. At the same time, I still got longs on my books. My portfolio will benefit most from a rotation trade. I've been nervous that I'm just too early on everything, to be totally honest. I think my thought process is in the right direction. Naturally, I think my thought process is in the right direction because it's my thought process, and I could easily be wrong because all traders are wrong from time to time. But my concern has just been, that I might be a little bit too early still on the tech short because you could get that squeeze up parabolic move over the course, especially while we're still in front of, options expiration, or just a steady upside grind to continue to come in. And then at the same time, I'm like, am I too early on the IWM trade because the market's still pricing in too many cuts and that needs to come back down to reality? But it was very encouraging to see that the IWM could trade as well as it did today with the TLT actually being down. So we'll see if that's just a one-day phenomenon, just a little bit of a catch-up trade because the difference between how the NASDAQ is moving versus the IWM, the spread between them has just gotten massive. Dimitri posted, which was another thing that got in my head this morning. Dimitri posted a chart at, I think, 7:17 a.m. in the VTF, if my memory serves me correctly, that was showing like the NASDAQ breadth spread, which also is just it's all getting a little insane at this point, to be honest, where something's got to give, and I think it's timing is the big question on that, because I might be right with my idea but wrong on the timing, and if the Qs want to give one more parabolic move, I could get totally blown out. So you got to make sure that either your sizing is appropriate enough to be able to get through that, or you're hedged enough, or you're stopping yourself out and reassessing. So that's just kind of been my biggest thought process. But today there was a lot of evidence that we could get that rotation trade. Just the short-term tactical being in the red zone, that's very specific to Mag 7. That's the only reason it's there. There's nothing else that is extended. The IWM is not extended. The average stock on the marketplace is not extended. So short-term tactical getting a little bit extreme was like, maybe this is a opportunity for me to take a little bit of a shot further to the short side and see what can happen. And at the same time, I'm slightly bewildered, though it's in my favor, so I can't be upset that the IWM was able to perform as well as it did with the TLT being down. XLE gave great follow-through, which we're looking for this morning. And the growth tech was really strong today overall. Obviously, there's exceptions out there. There always is. But growth tech overall was really strong today. And you could see it pre-market. It's just that we've had plenty of other occasions over the course of the last month or so where you saw the IWM strong pre-market, you saw growth tech strong pre-market, but you saw the interest rates not cooperating, and then as soon as the markets open, IWM's getting dumped, growth tech is getting dumped, and today they were able to hold up, which is great. And the IWM, by the way, was able to close above 196, which is one of our other big key levels that we're continuing to pay attention to. And a close above 196 is, the thing that I've said about the IWM and the rotation trade is I feel like I need either one of two things to occur. I feel like I need the market to reprice interest rates and then the cuts to begin, in which case I think that IWM and small caps and mid caps will begin to outperform. But that's probably not a situation until April or May that you could count on that. Or the technicals just prove it to me. And how would the technicals prove it to me? By getting above levels. By getting above 196. So mission accomplished for today. and really by getting above 198.50. We start getting above 198.50, then I don't know, things are starting to look really good, especially if there's any world where that's happening, where the Qs are actually weak and semis are a little bit weak and money's coming out of them and going into other things, which is, definitely to be determined. That's not an easy trade, but we might finally be setting up for it. We'll see if the technicals in the IWM can continue to confirm it, and we'll see if we get kind of continued heaviness with the NVIDIAs of the world like we saw today. So that's all that I've got. I'm happy to answer any questions or anything that you guys have. First, just this comment from Dimitri. Should have the possibility of call decay on our side. Short NVIDIA. Tomorrow with weeklies expiring, those out of the money calls 700s and above are juiced and could decay quickly as it pulls down away from 700. Okay, something to keep an eye on. Let me scroll up here in the VTF and look to see if I missed any questions. The boy wonder strikes again. Pat H. Where's pins? Down 15%, but well off that 30. Okay, so I guess the first and only question in the VTF for now is from Jerry C. Hey DO, basic beginner question as a follow-up on the discussion on stops a few nights ago. Do you typically base your stop on the prior candle, depending on the time frame, or on the 80 EMA or the 21 EMA, again depending on the time frame? While I don't want to lose too much in a single trade, I want to give being right the best chance. So the first thing that I would say, the easy answer to part of your question is that I don't use moving averages as stops ever. I think that this is a really important concept for traders to understand. Moving averages are not support and resistance. They're not appropriate places for stops. All a moving average is literally a squiggly line that's an average based on previous periods of price action. It is not a technical buy or sell signal in any way. Moving averages are tools. They're tools to help us read and analyze price action. Sometimes trade execution will coincide with a moving average, but that's going to be more coincidence than anything else. Sometimes you see a stock that's uptrending and it's riding its 80 MA as an example perfectly for a certain portion of the day. Well, it's not necessarily a coincidence. It's probably because there's an algorithm that is very simple that says buy on the 80 MA or buy on the VWAP. So you'll see them be kind of self-fulfilling prophecies at times, but for me that's never enough to put a trade on because the stock touched a moving average or to use a moving average as a stop loss. I want my trades and my stop losses to be dependent specifically on the actual price action that comes from the chart itself, that's coming from the bars. So it's not necessarily the prior candle either. Another thing that I'm not a fan of is sometimes I'll talk to people who, what's a good trending stock today that I could use as an example? I don't know, maybe ARM. Who just trail based on the last 5-minute candle, or whatever their time frame is. Whatever that last candle is, they just trail and trail and trail off that. I don't like that. Not every high and low of every candle has significance. What makes a candle significant is the internals of that candle and all of the other candles on multiple time frames that are around it. So what do I mean by the internals of the candle? Are there tails? Are there pivot points, right? Pivot points are really important. A pivot point is the spot in which buyers took control from sellers or sellers took control from buyers. Like, I don't know, very simply, this high right here is a very important high, not just because it's the high of the day in hindsight. It's not why I'm bringing it up at all. It's because that's a pivot high. This is a spot where sellers took control from buyers. That makes it important. Doesn't have anything to do with moving averages or anything else, and that's just one on the upside that comes to play, or that just comes to mind as I'm looking at this chart, I should say. Yeah, you want to trail based on, if you're talking about like trailing stops, you want to trail based on pivot points. And Jerry, I have a whole class on this in my training program that you should have access to. If you're not, email me or email your Class B member and they can set you up. But you should have access to all my classes. I have a class in there on, I think it's the game planning class, where I get into the specifics of my trailing rules. And I think that's actually one of the most important classes that is in that grouping of training program classes that I have. So I'm trying to think if that fully covered your question. Yeah, I think it does. Cool. Does anyone in here trade microcaps IWC? Oh my God, what is this? Whatever this thing is, you should not trade it. There's no liquidity at all. I don't know what it's composed of. If you want to keep an eye on it because you want to be able to have an idea of what microcaps are doing, fine. I've never seen this ETF before, but you should not trade something that trades 14,000 shares in a day. There's just no liquidity for you to get in or out. The IWM, the Russell, is one of the major indices, and the IWM as an ETF did 35 million shares today, as opposed to this IWC that did 14,000. Yeah, so from Carol, but algos actually trade off the ADMA quite often. You can see it. Yeah, they do, and that's what I said. You will sometimes see a stock perfectly holding a moving average, and that's because there's a simple buy algorithm that's on that stock that just says buy on the ADMA or buy on the VWAP. That's not enough for me to buy the stock. If that is the case, where there is an algorithm that is buying on the moving average, it's creating a trend, then the same trend continuation setups that we always talk about will still present themselves, and they'll present themselves right into the equilibrium area, which is exactly where we want to look for them anyway. So I'm not saying that you can't coincidentally have a trade that is long off a moving average. What I'm saying is that you just shouldn't be, buying or selling or using stops as moving averages, because they're not consequential to the supply and demand aspect of the stock itself, which is what we actually want to be paying attention to. From Victor, if I'm understanding correctly, SPY and Qs look like they are losing steam and are ready for a bit of a pullback. Is that what you mean by rotation day? So what I mean by rotation is basically money coming out of what's strong and money going into coming out of what's been outperforming, and money going into what's been underperforming. Namely, the Qs versus the IWM. I don't know what the percentages are now, but a week ago the Qs were up 4% on the year and the IWM was down 4% on the year. So the idea of a rotation trade would be that the Qs weaken, money comes out of them, and that money goes into the IWM, which allows the market to play catch up on that spread. So, if that were to happen, maybe the Qs pull back 1% and the IWM goes up 3%, and now the spread is that the Qs are up 3% on the year and the IWM is down 1% on the year, and it becomes much less. So it seems to me like that's becoming a little bit extreme, which we've seen that happen in the past. It's something that can continue. It's something that can become even more extreme, and that's why I'm cautioning patience. I've been cautioning patience and caution. I cautioning patience and caution. I don't know if that makes any sense, but I've been cautioning. I'm losing my words here. To be patient on any bearish thought process when it comes to the SPYs or the Qs, even if I have one myself. Why? Because look at the technicals of the SPYs. They're beautiful. They're beautiful, beautiful uptrend. If you look at the SPYs in a vacuum here and no other information that's out there, you say, wow, that's an incredible trend. I want to buy that trend. And you know what? Sometimes the most simple thought process is the right thought process to have. And with trend trading, I say this all the time, is better and easier than counter trend trading. I am not by any means in here today calling for a top in the stock market. I'm not. I'm simply pointing out that there is evidence out there right now that says that we could use a pause in some of the stocks that have actually created the strength in the SPYs and the Qs. What does that look like? I can't be 100% sure. And that's what I was saying to Chris J earlier in the VTF, because Chris J was saying, you know, the price action is, and some of the information that he's looking at maybe could lead to a rug pull for the market. And I don't, oh man, is this the package I've really been waiting for? Hold on, I gotta text my wife real quick to see if she can sign for this for me. My passport's arriving in the mail today, which I need pretty badly. Sorry, 1 second. I texted her, hopefully she can do it. Otherwise, I'm gonna have to run downstairs real quick, potentially. Lost my train of thought a little bit, but you know, basically what I'm saying is that when you got technicals that look as strong as they do right now in the SPYs and the Qs, trying to say that the top of the market here is here, you might be able to be right. I mean, we were pretty spot on at the end of July when we called the top of the market up there, but you know, even when I start to feel a little bit more confident that a top to the market could be here, hold on. Okay, she's gonna take care of it for me. I still don't really want to call for that. I want the technicals to prove a reversal first, which is exactly what we did in July. We said, hey, all the evidence is here that we could get a retracement lower in the market. All the evidence is here that says we should not be continuing to buy. The positioning evidence, the systematic selling evidence, the push through failure in the technicals, all that stuff was saying, hey, no more buying. We can look to short, we can look for a retracement, and we were shorting at the end of July and not buying anything, and then maybe that retracement can actually become a reversal. That's what we want to look for. And what I was saying with Chris J earlier is if the rug pull comes that he was saying he thinks can happen, and I won't be too surprised to see it either, what does that look like? Is that going to look like everything selling off, which is what, you know, real down markets look like? Or will it actually be a rotation trade where it's money just coming out of these extremely extended semiconductors that just goes into the things that have been, you know, underperforming the market to some degree, like your XLEs of the world, or your you know, some of these growth tech stocks are down 15% or more on the calendar year so far, have not participated in this rally with the Qs at all. Could that be what that trade looks like? To be determined. It's kind of what I'm positioned for. And, you know, that's what we do as traders. We, you know, I always hate the term bets because I feel like betting implies gambling, and successful traders aren't gamblers. But basically, you put risk on in areas where you feel you have an advantage via risk reward and probability of success. And risk reward is simple math, and probability of success comes from a lot of different information. It comes from understanding all of this information that we talk about all the time, and an understanding of those big picture technicals. So yeah, I hope that helps, Victor. It's probably a long-winded answer to your question. From Vincent C. Just wanted to say thanks about mentioning the all or none trading mentality yesterday. I struggle with that since it's just inherent in my personality, and I've missed good trades because of it, holding the whole position for too long and then giving it back. But you mentioned it yesterday, made me stop and think about it. I did a lot more scaling out today, and it was a good exercise. I had a good trading day overall. Okay, I'm glad to hear that, Vincent. You would also, I think, benefit from my game planning class if you haven't watched it already. So definitely watch that one. Um, cool. From Rich N. Is time to compile a wish list of growth stocks post EPS that may warrant our attention like in past years. I'm not sure we're at that time yet. I think that the IWM is cheap, but I don't think it's like bear market bottom cheap. You know, where stocks get to, where things are. You know, I like the idea when the S&P is down 20% or down 15% or something like that to create a wish list of stocks. And I remember we did that like in October 2022 when Meta and those names were at $80. It's like, well, you know, what names at these prices can you just buy and not be afraid of anything because they're trading just like so cheap? And at what price do you feel that way about it? Where you say, you know what, I'm just going to come in and buy. And obviously, you got to keep things like leverage in mind when you're doing that, because if you're too early, you know, you could have said, hey, Meta was a great buy at 140. You were right, but it went to 80 first. And if you got too much leverage on, you're going to get hurt. But I like that idea in, you know, really deep, weak markets to do that. I don't think we're anywhere near that point. Yes, the IWM is underperforming. Yes, some of those growth stocks are underperforming and are down a lot, but I don't think they're anywhere near that point. Especially those growth stocks, they double and then they get cut in half like it's nobody's business, you know? So down, you look at a growth stock that's down 15 or 20% on the year, it's pretty nasty compared to what the Qs have done, but that's nothing compared to how those things can trade. A lot of those names are never going to ever get anywhere close to their 2020, 2021 highs ever, I don't think, no matter what happens. Maybe a few will come into real companies and in 10 years we'll get there. But most of them are never going to see those prices. No problem. All right, cool. It looks like I got through everything in the VTF. So let's pop over to YouTube. We're seeing a lot of comments. First from Gabriel. No chips are an overcrowded move, and AMD has relative weakness, but do you like AMD for an inside day and up? The volume dried up on the pullback. Let's take a look at AMD. So AMD's got 2 inside days in a row. We actually talked about the inside day from today in the morning meeting. So AMD's producing a bullish wedge here. You got 2 inside days in a row. This is a bull pattern. This is a pattern that should break up. Okay? The keep it simple, stupid trade, which is usually the better trade, is to buy the inside and up if it breaks up. And normally, if I was looking at a chart like this, I would only be interested in the long. I would say, you know what? I like the inside and up if it triggers. If it breaks to the downside, then my trade is just gone and I don't want anything to do with it. So either it triggers to the long side and I'm buying it, or it triggers to the downside and I'm not doing anything. I think that right now, with just kind of how the semiconductors have gotten to where they are, this actually is a two-way trade. I think that you could take the break of the inside day today potentially in either direction. If it breaks up, well, it's very simply a beautiful bull wedge that's breaking up. If it breaks down, then, you know, maybe the people that are caught off sides start really profit taking and piling out of the position. So thanks for the question, Gabriel. From Robert. Coming into the morning because of ARM, we were focused on trading the QQQ. What contributed to the strong IWM move in your opinion? I have no idea. And how can we note this for the next time in the morning? I have no idea why the IWM was so strong today. We noticed it from Growth Tech in the morning meeting and pre-market that they were acting strong, and it was something to notice because relative strength is always important, and there's never going to be a perfect correlation between individual stocks and indices and interest rates, but it really has been so far this year very consistent. Interest rates up, IWM down, and this morning interest rates were up and the IWM was up, and that can definitely happen. And again, it might just be as simple as it's the beginning of the rotation trade because the IWM is maybe overpriced in where interest rates are, and we're ready for a bounce as the Qs took a break. I really don't know. I have no idea why the IWM was as strong as it was, but we saw it pre-market, and that's why I said earlier I didn't trust it. I was more trying to focus on the QQQ short side, even though that's generally going to be the harder trade. It's the counter trend trade. Normally, I would prefer the opposite. Like if interest rates were down this morning, I feel like I would have been all over the IWM and all over adding to growth. Instead, I was like, I don't think I can trust the IWM with interest rates making this move. So I would actually rather focus on the other side of the trade of the rotation trade, which would be the Qs going down. So I hope that helps. Yeah, then we had the bond auction at 1 o'clock, which made the TLT uptick and particularly helped the IWM even further. So, can you elaborate what it means for the market if the Fed is selling bonds? Sure. So the Fed isn't selling bonds. The federal government is selling bonds when it's the bond auctions that are actually occurring. And we went over this recently, but it's probably worth going over again. It's so interesting how these bond auctions are moved in the equity market, and the treasury number that was out like a week ago or whatever, the refunding number moves the market, because I don't remember those numbers ever being equity market moving to this degree. But it's as simple as supply and demand for bonds, right? So who sells bonds? Who sells treasuries? The federal government sells treasuries, and they do so. They sell debt instruments. They're selling debt to raise money to fund government operations, right? So the question is, interest rates are going to be decided based on how much supply the Treasury chooses to issue, and how much demand actually comes in when the Treasury issues it. And if the Treasury says, hey, and I actually didn't read the 1 p.m. numbers because I was in a meeting, but I just saw the market reaction to it. But if the Treasury comes out and sells less bonds than expected and demand stays equal, that means that the price of bonds would move higher and that interest rates move lower. Interest rates moving lower is going to be good for interest rate sensitive parts of the stock market. That's really what it comes down to, and that's why these auctions have been so important, and the Treasury selling estimates that were out like a week ago or whatever are so important. What does it mean for the market when they struggle to sell bonds? Well, you'll always find a buyer for just about any product. It's just a matter of if you got to bring your offer down, right? So if they're struggling to sell bonds, and I don't, whatever that actually means, but if they're struggling to sell it, to me what that implies is that they have to bring the price down. If they bring the price down in order to be able to sell what they need to sell, then that means that interest rates are moving up, which is therefore going to be bad for the interest rate sensitive parts of the market. So I hope that helps, Robert. Back to Gabriel. Do you like STNE as a benefit of rotation? Man, I haven't looked at this number in forever. Isn't this like a Brazilian company or Argentinian company or something? I don't remember what they do. I thought they were like a South American brokerage company. I forgot all about this stock, actually. I remember this thing from 2021 when it was bananas like everything else, and at one point it was a $95 stock before going all the way down to $7. Generally, you'll find that there's a lot of charts that look like this that got absolutely destroyed but have built huge bases and are actually breaking up and bull flagging above those bases. So I don't know the company well enough to know anything, honestly, but this looks like a lot of most of the growth tech stuff right now, which I think actually has a pretty bullish setup. So this STNE might be worth having an alert out for 1850 for a breakout. I'm going to put that alert out for myself right now because I almost forgot that this company existed, and at one point it was a decent trading vehicle. Bob is heavier than Sun. Yeah, the CPI number out of China was just no good. It was just no good. It was worse than expectations. They've got bad deflation over there. I mentioned in yesterday's afternoon meeting, I think it was yesterday, that I feel like the news is at that point where it can't get too much worse. and then the CPI number came out that was ruthlessly worse than expectations. Stock is still off lows of the year, and I still think that the bigger risk to these Chinese stocks is to the upside. Should the government actually start stimulating properly, they need to come out with some real helicopter money over there in China. I was thinking about it this morning. They almost need to do what we did that caused inflation over here, and just like, you're worried about your domestic spending, write everybody a check and write every Chinese citizen a check and tell them to go out and spend it. And yeah, you'll see the market go up real fast. Cautioning patience to patience. Yeah, sorry. I need a good night's sleep tonight. From Alan, do you think that the dollar can continue higher after the pullback from Monday? I don't have a strong opinion on the dollar right now. I've been watching it because of its important effect on the market. But yeah, I honestly don't have a strong opinion for you on the dollar. I've just been watching it. I'm seeing that Bill is bringing up an additional point here for the person that was asking the question about bonds, which is also really important. So I'll read it all out. I think that was off of Robert's question. Other than hurting interest rate sensitive names, it can suck up liquidity if participants want to park money in bonds and get a guaranteed return if it's large enough to make sense. Yeah, and that's why, as a general rule, and this is one of the things, this is why, Mike Wilson's out of a job, I guess, is interest rates moving higher compresses multiples. So if you're like a pure fundamental analyst, and this is why I think, Mike Wilson was so staunch on his bear thought process, and Marco to some degree as well, is that they probably thought that multiples needed to compress much more significantly than they actually did. But what we understand here is that part of the thing that I think saved those multiples to some degree is just the dampening of volatility and the consistently low VIX because of all of the option selling that occurs. And on top of that, you've got the new structured products that are selling as well, and helped really kind of maintain a bid under the equity market to some degree, maybe even better than it should have from a fundamental perspective. And now those guys are like out of jobs, which is also crazy. I mean, I don't know. Finance is a crazy industry. Like, I think that people, as a general rule, are way too harsh on, and I'm brutally harsh on like the sell side analysts for individual equities, but I think that that's because their incentives are all messed up, like you're saying. But when if you take a guy like Mike Wilson, and I never really fully agreed with the degree of his bear process, but he was definitely right in 2022, or Marko Kolanovic, who turned bearish at the bottom. These guys are sticking their necks out there and providing a lot of research and providing a thought process based on sound research, and they're in the case of those guys, maybe not so much with Marco. They're not just following the market like every other analyst does. And I think that people who have overly hated on these guys are very much in the wrong. And I would even say it's the same with like a Jim Cramer. And I know Jim, believe me, I don't watch Jim Cramer. I'm not going to be tuning into his TV show tonight. But I don't like the degree of Jim Cramer just called is like using him as a counter trend thing. What he does is very difficult, and what he's trying to do more than anything is provide entertainment. So he, if you ever have watched his show, which I try not to watch it, but sometimes it used to just be on in the office after hours, he's answering questions on like 200 stocks in any given week. It's impossible to be able to do that with consistency and have a perfect opinion on every stock off of some viewer's call-in or whatever and be consistently right. So you kind of have to parse through the information that you get from anybody, whether it's Jim Cramer or me or Mike Wilson or whoever. There's no one out there that's going to be perfect. What you want to be able to do, what I've learned to do, is take the research that these people are providing and just internalize it, and don't become married necessarily to any one thesis at any time. View all of the data from all of the different places that you can get information from, and then draw up a thesis for yourself that coincides with the information that the market is providing through technical analysis. And then the other really big thing, I think, though, is just understanding market structure, right? So it's all of these things that we need to combine into one thought process. And sometimes people get hurt when they're married to one or the other. I was guilty of this even myself at a certain point early on in my career, where I was like, technical analysis is all that matters. I don't care about your fundamentals. I don't even need to know the name of the company. I just need to know the technicals. That's such a bad thought process. There's so much more to it. But the other bad thought process that you'll see a lot of people do is say technical analysis is chart magic voodoo. That's a bunch of BS. All that matters is the fundamentals. Anybody that's so staunchly in one camp, you should be very careful on the conclusions that they draw. I think that you should take in their premises, though. Take in the premise on why Mike Wilson believed that the market should go down, but look at it also in conjunction with the technicals and in conjunction with market dynamics. And I think that that's really where he fell short. He failed to understand the importance of this kind of modern market and how it's evolved with option structure and how it affects volatility and how that affects the market and how that can have an effect that could make up for PE multiple compression. So you want to take all of that and put it together in kind of one cohesive thought process as best as possible. That's what I try to do. And then, still be prepared to be wrong, and make sure that you manage your, and that's still why risk management is the most important part about trading. Buy a stock and it goes up and you're making money, congratulations. I could care less. Anybody can do that. Show me what you do as a trader when your ideas are wrong, how you manage that position, how you manage risk, and I'll show you the difference between somebody who's successful and not successful in this business 9 times out of 10. That is really kind of the key to all of it. Rant over. I saw Alan had a follow-up. Short gold, euro, and yen now. Today only the yen continued lower without gold and the euro. Do you think that the yen is overextended or leading to further weakness? So I want to be honest, and I don't want to comment on areas of the market that I don't feel strongly about. I follow currencies to the degree to which they affect U.S. equities is really what it comes down to. I don't have a position or a thought process on the euro or the yen right now, or even the dollar right now. I'm just watching the dollar to see how its movements are going to affect equities. Commodities maybe a little bit more. I'm paying attention to nat gas. I'm paying attention to oil. I'm paying attention to gold. Most of the time, I want nothing to do with the gold market, to be honest with you, from a trading perspective. That kind of includes right now, though this gold chart looks bullish to me, not bearish. But this will also be affected by the dollar and by interest rates to some degree, so you got to pay attention to that. But I think that the gold chart looks pretty bullish here. It's making a bull wedge. It could fail off that. Commodities tend to be much more mean reverting than equities do. So meaning if you're looking at the stock market at all-time highs, it'll have a much higher probability of giving upside continuation than looking at any commodity that's at 52-week highs. They tend to be much more mean reverting. So why do I say that? Because when I'm looking at a bullish chart in gold, I think that there's a higher probability of failure of that bullish chart than it would be if I was looking at an index of stocks or a stock itself. But quick glance at GLD and it looks decently bullish to me. All right, looks like I got through everything. From Rich here. To be fair to Kramer, if he doesn't know the stock in the lightning round, then he won't cuff it. He'll say he doesn't know the stock, do research, and a segment about it later in the show. Props to him. I can always respect someone who says that they don't know. It's very hard sometimes because, especially for the people that are on TV whose job it is to entertain, to say that you don't know. Everybody wants everybody to have an opinion on everything all the time, and it's impossible. And I think that the whole world would be better off in every way, and I'll leave this as a final note, if people could do a better job saying, I don't know, I need to learn more. And that's economics, stock market, politics, probably personal life. We could probably all do a better job saying, I don't know, I need to learn more, instead of just trying to force an opinion or a point. So on that note, have a great night, everybody. I will see you all tomorrow.